Okay, so we are looking at the entity strategy. Um, so we've identified this, this block, this area where there was a range going on. Let's use this one instead. Let's use this range. So from here to here is like 140 pips. So we don't have to go too far. This is the daily. So what I am saying is, on if you want to trade this strategy, within a range, what you could do, do is look at the time frame that you have the range on and drop 2 or 3 time frames lower. In this case, this is the D1, the daily time frame. So you could go to either the 1 hour or the 30-minute time frame to find, an entry. So we're going to do that now. We're going to now drop lower. Let's go to the 30-minute time frame. Where are you? Where are you? Where are you? Where are you? There we go. Okay. So, I mean, even if we cut it from here, we can be able to, I mean, that's like a 130 pip. So what we're going to do, let's let's use the top. Let's take it from the top there. Remember, we are looking for, at least two, is a two can, we're looking for the two candle setup, which is the entity. That was the range. Okay, fine. This does not quite stick out in the sense that the high, and when we say two candle setup, you usually want it to be that it's, in the form of shape, is shaped like this. It was from a swing high or swing low. This is a swing high, for instance. So when it's going to be a bit of a tricky one to pick it up here. I mean, that would be a bit more advanced. But we see another, it came all the way. We could have traded from here up or traded from there down. So let's trade it from here up. Let's trade it from here up. It's going to require you to be patient, guys. You're not going to jump into any trade, just any and every trade. No, you're going to wait for the right condition and criteria for entry. Okay, so we know we are operating from around there. Okay, so here now, what can we see? I mean, these are smallish candles. I mean, preferably you want the candles to be a bit sizable, but hey, you know what? I mean, if you cannot find sizable candles on one time frame, maybe go to a higher time frame. Let's go to a higher time frame. They are still small, but at least, the principle is the same. So what do we want? This is the candle that sticks out the most. This candle sticks out the most. That's this red candle. That a range of 14 pips. And, for those of you who have had me, teach this before, what I say is that if the candle is small, in a sense, it does not quite then qualify as being a strong man, because one of the criteria is that the strong man is taken out. A strong man, as in a sizable candle, is taken out. So with this one being, just a smallish candle, you want to string it with other candles to make it qualify as a strong man. So I will not be going with just this. I will string it up with, compare this candle, for instance, compare this candle to these candles here. They are small, but if you were to put them together, like from here to here, the range of this one is like 28 pips. The range to get 28 pips, you will have to like join about 4 of these small candles together. So hey, let's try and see if we can work with that. That's about 26. So let's string these 4 candles together, and we want the green candle to take it out. Guess what? This was the candle that took it out, that took this strong man out, or took this. It now becomes one, if you like. We've joined them together. So this is the one that took it out, and it came and gave us multiple retests. Now, this is not my ideal kind of retest, because I would have preferred if it actually came and closed inside, but it didn't. Why then would I perhaps enter this trade? Because it gave me like 3 weeks. It retested like, well, it gave me 1, 2, 3, 4, but usually when I get 3 weeks, each of them not just hanging, not just wicking off that area, not just wicking off the range, but actually piercing it like it did here. 4 times it pierced that area. 4 times it pierced that area. I would then obviously think, okay, it's good enough to enter, especially, because it's good to be able to see if there are other confluences. What other confluence would we, go with here? I mean, if you are not satisfied with this is a bit of a tricky one. I don't want to, teach you, start you off by teaching you a tricky one. So let's go with one that is quite good. So guess what I would do? If these candles are small, let's not work with small candles. Go with something that is sizable. Go with here. All this, so you're taking it as one big drop. This is the candle that basically took it out. You are now taking all this as one candle. It's still not the best example, but I'm just trying to give you the idea and the principle. You are taking this as a strong man. The stop loss is going to be at the bottom. The stop loss is going to be at the bottom somewhere. This candle took it out. It went up. You're waiting for it to come back into the zone. This is red. That's the stop loss. That's the range of the strong man. So it broke out of that range, came back down. It didn't quite test it. So maybe you wait. Yes. It came and broke into the range. When it came back out, you could have taken the trade here. I can see our trade is going against us, but never mind. We'll stay in there. We'll stay with the trade. Okay, guys, I'm just trying to use the right color so we don't get it mixed up. Okay, so we know the yellow solid lines are the range. The entry is when the candle broke out, came back in, and when it came back out, we entered here. So that's the yellow broken line, that's the entry. And what's going to be our TP1? That's the size of the range from here to here, which is like 54 pips. So 54 pips would be somewhere around here. Let's just bring it down. So that's like our, oops. So did we get it? We got our one-to-one at least. So the strong man broke out, went up, came back inside like I wanted to. And then when it came out again, I entered, jumped in here, targeting 54 pips. It went up, came down, went up, was doing all that. Eventually hit our TP1. Now, did it go far? It didn't go further. It basically gave us more than TP1 before it began to go down and eventually hit our stop loss. Now, like I say, this was not the best trade to take. Why? Because we were in the range. If it was a downtrend, it's good to go with the trend. But just to show that, yes, even if it's in a range and you decide to trade it within a range, you can still get TP1 most of the time. You can still get your TP1 most of the time. Now, I don't know if you have any quick question before we move on. You can unmute and ask or leave a comment. It's always better to trade it in a trend. But even if you decide to use a range, it's still fine. Trade it in a range is still fine. Like see the downtrend, for instance. Check this out. Once it broke out of that range, it's continuing its trend. You can then pick it up anywhere, knowing fully well that the market is going to be more generous if you are going with the trend. Again, we're looking for two candles that stick out. We can see this one higher than other candles, even though it's, you can say, okay, fine. It was coming down, pushed back up, let it take out a strong man. We can say, let him take out that one. Even if we decide to go with that, by the time he eventually takes it out, what happens? I mean, those who have seen previous videos recorded on trading the entity and HR strategy, I would encourage you to refer to them as well, except that this is enhanced, is an enhanced training, entity training, because it requires you to wait for a better confirmation. In the past, when I taught it, just the price action and, we went with the price action as confirmation. Oh, it's broken the strong man, it's retested, we get in. But now I'm saying the better retest is when it goes and closes within the range. If it comes back out, continuing the journey, you jump in. So this one, for instance, you are seeing here, this candle sticking out, it took out this strong man. Just in case you're saying, I'm not too sure, I think I want the strong man to be more sizable. Okay, fine. Let's make it here, Eventually, it took this strong man out, or rather, it took the strong man out. This candle took him out. We're waiting for a retest. We got a retest there. So you see exactly what I'm saying. It's more or less just touched, that zone. It didn't pierce inside. But because the trend is strong, you're able to get away with it. Because the trend is strong, TP1 is like 45 pips. So from here, you're looking at 45 pips. You're looking at 45 pips there. Where did you enter? This is the one that broke out, retested, came and closed here. So assuming you entered here to TP1, that's like 21 pips for TP1. At least get that. Because you're in a trend, you know it's going to give you more. You can then decide, okay, fine. You can then decide, I will use structure for getting my TP2 and TP3 and so on and so forth. Now you can see if we entered here, if we look left, there isn't structure to use for measuring it as such, because the last time price came here was kind of like some time ago. So what you do, if you go on a higher time frame, you'll be able to get, structure. You'll definitely get price around there. But other than that, we can see it gave us a whole lot more pips. Let's say we entered there, we can see the stop loss would have been where? The stop loss would have been somewhere here. Stop loss of about how many? Let's say about 95. Let's just say 100 pips. It gave us almost 200 pips, 2-1. So you see why it's important going with the trend as opposed to going against the trend. You see, whenever I'm trading with the trend, I'm more relaxed, I'm more at ease. Because even if the market pushes hard against you, it's going to continue. It's likely not going to go and hit your stop loss. I mean, consider this, for instance. We're going to go analyze our trade, which we are in, the Euro JPY, because it's not quite going the way we want it just yet, even though I'm still okay with that. So we entered here and it went up. Check what happened. It came and hit TP1. Can you see? We entered here. What's the word now? It was consolidating. It finally pushed and hit TP1, went down, and then went back up. How many pips? About 50 pips. I know some people will panic before this massive drop. The trend is your friend. Well, until it reverses. But the trend is your friend predominantly, So you entered here, it moved up against you like 19 pips, 20 pips before dropping massively. See, in just 1 hour, all this happened. Okay, so I don't know if there are any questions. I would also, I know some of you did not catch the beginning of this. You were not with us yesterday, so I would explain the whole idea using a very good example now. Let's use a very good example of how to trade this strategy, what to look for. This is GU. Let's check that. So this is the trade we are in. Okay, let's use the trade we are in as a possible example. We are buying, we bought this one, but let's use the sell first. You know what? Let's use the buy. Since we're in the buy, let's use the buy. Okay, so with this strategy, we call it the entity strategy. Entity as in, what an entity is. An entity is is a like a living being, or well, not necessarily a living being. Is an entity is a body. It could be a living thing, could be a non-living thing. That is a body. An entity could be an individual or a group of individuals. You know, if you consider a company, for instance, a company, you say the board of directors. The board is made up of 4 members, but is considered a board. That board is an entity. Each and every person in there is also an entity, just like the 5 of us here today, we are all entities. But if we come together as one to form a company and we're all the directors, it's a board. You get what I mean? So the entity strategy is something that I, got from the Bible. I'm sure in the Bible you've heard of principality. Principality is usually a strong man. So what we are wanting here is for the strong man to be taken out. Once the strong man is taken out, it means that his side has lost. So if the price is coming down, you are having mainly red candles, red, 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 red. And this is the last of the red candles before the price pushed up. Okay. Now, each and every candle in a sense is an entity, but I'm not, considering them as strong entity. The last candle that is taken out is the strong man, as it were. But then, like I say, it has to be sizable. So this one is not sizable. This one is not sizable. So what I'll do is I will join him up with another candle so it can qualify as a strong man. When a strong man is taken out, it's most likely the case that the trend is going to continue. Just check your chart. After this, each time a strong man is taken out, it's most likely the continuation of, or rather a reversal. So here, what we're going to do, sometimes you could string 2 candles together, 3 candles, 4 candles, maybe even 5 like we did. But I would say, okay, it's better to be able to string 1 together. Here, let's string 2 or 3 together. See, if we string these 2 together, these 2 red candles, this entity could not take it out. You have to string this together as well. Eventually, it was taken out. When I say taken out, I hope you guys know what I mean taken out. It means the candle, the opposite candle, or the candle of a different color has gone past the high of that candle. So this one closed above it. We are now waiting for a retest. We got a retest, but it's not the best kind of retest. Are we okay with that? Okay. Assuming we had strung this together, assuming we had strung these 3 candles together, guess what? The candle now began to go up. This candle now took out this strong man made up of 3 candles. It gave us a retest. Again, it did not go in. But since we're not happy to go in there, unless we have another strategy, we waited, another retest, a retest the way we want it. It actually went and closed inside the range. So we've created a range there. It went inside the range. When it comes back out, we jump in the trade. Oh no, not this time. I won't jump in this trade because it's too far away from the range. Why? If you enter far away from the range, because your stop loss is going to be on the other side, the red candle, your stop loss is going to be too big. You know, your risk to reward should be good. So if you entered when it broke out and closed here, your stop loss is going to be like 111 pips, 110 pips. You might struggle to get even one-to-one. I mean, on this occasion, so far, the highest has been this, 50 something, but then don't take the risk. Don't trade with a negative return on investment, if you like. A negative R, don't do that. Don't do that. You know, so what to do is once you see the price has closed above like that, you can come and place a stop loss, sorry, a buy limit order close to the range. I know some people prefer to use market execution. You know, when we are trading live like this, yes, we love to enter the trade just then and there and then. But there are times when you use limit orders. Come and place your limit order so that even if you go shopping, by the time the market goes there, you're not by the computer or the phone, it gets there, it triggers. Guess what happened? You thought you had missed it because that's why people want to enter trade late. That's one of the reasons why people enter trade, at the worst possible price because they are afraid of missing out. No, if you miss out, fine, that trade is not for you. There are so many other opportunities. But if you place the order here and you went to drop off your children at school, by the time you came back, boom, the market had returned and triggered your trade. And guess what happened? It pushed down. Now you are, you are in good stead, as it were. So what to look out for with the strategy? One, you want an entity setup. An entity setup basically has to do with is a two-candle setup, at least two-candle setup, where one of them is higher than the other. One of them is clearly sticking out. On this occasion, with these two candles, this one is the one sticking out. The one on the left is the one sticking higher than the one on the right. This is the one we call HR. I would, maybe I'll send you the video and you can look at that. HR, we call it halt and reverse. The price was going up, going up, going up, going up, going up, going up. Boom, it stopped there. The next candle opened, it didn't go higher. Instead, it reversed. So we call it halt and reverse. Going up, going up, going up, going up, going up, halt, reverse. Same thing here, going up, halt, reverse. Whereas the entity setup, the higher candle is on the right. So this is a proper entity setup. The higher candle is on the right. On the halt and reverse, the higher candle is on the left, on the other side. But guess what? You can trade them both as entity setups because what matters is that if you are selling, you want the green candle to be taken out. Whereas if you are buying, you want the red candle to be taken out. So whether it's an entity setup or HR setup, it doesn't matter. What matters is that what seemed to have been the predominant trend has reversed. So on this occasion, here, you're wanting, this is a real strong man. You don't have to join it up with other candles. This is strong enough, massive, massive candle. So you want this candle to be taken out. Let's draw the range. So we saw that the candle was eventually taken out here, taken out if you like. It went and retested. You can see the retest candle basically, well, okay, fine. This one retested as well. You know, this one closed above it, but just about, just barely closed above it. It's not the best kind of retest I want, but on this occasion, I might have to look for confluence to see. Oh, okay. On this occasion, I would not necessarily look for confluence. Why? I don't know if anybody can tell me why. I will not be looking for confluence here. I've zoomed out so that you can see, you can get the context. I would have wanted it to go above and close inside, but it didn't. Come on, guys, unmute and tell me why I would take this trade the way it is.
It's on a strong downtrend.
Absolutely. You can, I mean, you just need to look left. You can tell it's in a strong downtrend. So I don't really have to wait for, you know, my A plus retest. So I'll be looking to jump in. I'll be looking to jump in at the close of that candle, which is just there. Now, just in case you're saying, okay, fine, okay, it's a strong downtrend, but I'm still not too comfortable with that. Wait for a red candle then. This is where this one closed. Will you enter here? It's too far from there. So again, what I would do, I would come place my limit order close to there. If I really want to be aggressive, I'll make it at least the 50% mark, 50% level, 50% of that candle. That's halfway through. I mean, really, I tend to use, like I told, I believe I told Emmanuel the other day, I usually would go anywhere between, 40 to 50%. So, I mean, kind of like here, which is like after I closed, it pulled back by 40%, and, I placed the limit order there because I know it's a strong trend. I mean, I'm not too fussy. In the past, for those who have been with me longer, who I taught entity strategy in the past, I wouldn't even so much bother with all this. Like I was saying before, in the past, we were not waiting for any strong retest, and we still won a number of times. I would usually just place my entry, on that line. So once it broke out of that zone in the past, I would have just placed my entry there. In the past, that's what we were doing. That's what I was teaching. I'm teaching contrary now because I want us to have a higher win rate. In the past, once it broke, any retest was good enough for me as long as it came close to that area. So in the past, would have entered there. But I'm saying, okay, fine. You could enter on this one or wait for it to close and come and place your limit order here. And guess what happened? It came back there and boom, we're triggered in, got all that. Now, with this one now, the range would have been 65 pips. If we got it from here, from here, because we're measuring from the range, $65 pips, thereabout. So we got there. So in a sense, we're triggered in here. Our TP1 was about 26 pips, but then we look left to use in finding our TP2 and TP3 maybe. That was TP2, so on this occasion, we're triggered in here. Our first trade closed at 26 pip. The second trade closed at 70 pips. So in total, about 70 plus 25, which is like 95 pips. Not bad, not bad, you know. And we don't know really if this trade, well, hopefully it's going to go up because we are in the trade, you know. But anyway, so this is in a nutshell. Let me ask, there are some comments or questions there. Let me see. Okay, that's fine. Let me see. Um, just 1 minute, guys. Let me. Okay, so that's fine. So yes, I don't know if there are any questions or comments. I mean,
Yes, I have a question on the Euro JPY.
okay,
I want to understand your thought process of going to a buy, what you were looking for, please.
okay, all right, that's fine. Let's move some of. Let's move some of this. Um, okay, so with this one, I I first saw it last night, and this is basically, I mean, obviously, this was not the best entry, but I reckon it will still deliver the results for us. I mean, if we're going with what we just taught, the price going down, up, down, and then going back up. Now, if you had this, in mind as the strong man, the price went up, came back and gave us a retest. It gave a couple of retests, and it seemed now we're getting higher lows. The best place, obviously, to have entered, I would say, would have been anywhere here. I mean, if we use this as the strong man, obviously it retested a couple of times, but going with that, the best place would have entered would have been anywhere in here or even inside the range. Now, to be honest with you, if the price comes into the range, I will be taking another position. I'll most likely be taking another position for a buy, but I'm going to be watching it. So, I mean, that is what I was thinking, what I was looking at, using this as the strong man. Let me see what my entry was. Let me see what my entry was on this on the trade. My entry was 156869. 156869. Okay. Okay, okay, fine. It was not exactly the best entry, but I am, from what I'm looking at, let's mark out and check the higher time frames. Before I went to bed yesterday, what I was of the opinion of was that it had bottomed. So let's go to a higher time frame. Okay, so what I was looking at yesterday is that it had bottomed. Let's take this off. I mean, we see here, this is the daily time frame now, the price going up and down, up and down. Each time it came to this area, it was as though it met with some sort of support. Each time it came to that area, it was as though it met with some kind of support. So coming to the 1 hour, if that is what it is, I was of the opinion that it has bottomed. And let me see where I have my stop loss. Just 1 minute, guys. My stop loss, or let's go with the stop loss I posted in the room, in the Telegram room. The stop loss there was or is 155,890. 155,890. Okay, so you can see that's where my stop loss is. I mean, the funny thing with this MT4 is when you change time frames, all the lines you drew kind of like go away. But anyway, so that's basically what I'm looking at. Entered, just 1 minute, guys, since the entry was 156,860. 156. Oh, sorry, let me pause this. We don't need all this. Okay, 156. 156. 860. Okay, so that was the entry. So I'm going to enter another trade here. I mean, this is a demo account. Don't do that. I just want to enter it so that we're as close to the entry in the room as possible. Okay. Okay, so I mean, obviously, we still have, all this stop loss. Like I say, I believe we have bottomed and it's going to be, going up. And with regards to our targets here, if we use the if we use structure or swing highs, that would be like a target, as in TP and TP. Okay. I don't know if there are any more questions. I mean, obviously, this is, the entity strategy. There is an advanced, form of the strategy, but I usually would encourage you to get familiar with this one first, before you even think of, going for the advanced one. All right. Since we're here now, I mean, it's still the morning session. I prefer to trade the London session. Let's quickly see if we can find any trades, possibly the ones that match this criteria. I mean, we can see gold on this time frame, the 1 minute time frame, it is in an uptrend. If we check 2 or 3 time frames higher to see if it's an uptrend as well, we'll be going to the 15 minute or the 30 minute. Let's go to the 30 minute. So we can see on the 30 minute, the price is pushing up. Like I said, if you want to take a trade, check the trend, check the momentum on one time frame and go 2 or 3 time frames lower, to get your entry. So as it is pushing up, it's a trade we can possibly take. I mean, consider this as well. The Fibonacci, if you were to use the Fibonacci here, from here to there, we've had the price come back into the golden zone. Now, this is another strategy I trade. The move up, a pullback, that's again, impulse, correction, continuation. I would usually jump in the trade when it wants to continue, having reached the golden zone or even lower. Once it closes above the 10 SMA, I would be looking to jump in. But let's look for confluence because we know gold has been overall bearish. Today could nevertheless be a bullish day. If the market is overall going in one direction overall, it does not mean that you would not have the next candle being in the opposite direction or the opposite color. This could be a halt and reverse day. Like I said, I traded gold yesterday. Let's go to that HRO. It was a halt and reverse. Now, the halt and reverse is it's not entirely different strategy, but it's kind of like different. You can see this is a halt and reverse. Like I did say, let me put the recording back on. Oh, sorry, it's still recording. That's fine. It was still recording. So I traded this halt and reverse yesterday. Halt and reverse, even though, you could trade it as an entity strategy, but it could also be traded on its own in the sense that the price was coming down, coming down, coming down, coming down, coming down, halt, reverse. If it halts and reverses, it's most likely because that is how far it's going to go. Because the next candle did not even come and take out this low. It came down, went back up and closed here, opened, dropped a bit, and went up. The bears could not, when it opened, the bears could not take it lower than this. So that's halt and reverse. So when I saw it yesterday, the price was already here. The next candle had already opened. I basically just entered. How many pips would I usually be going for? I would usually go for the range of either this green candle or that. Well, it won't be the whole range. You can get the whole range because if I had gone for the whole range, which is about 190 something, you see, it gave me more. But because I was going to bed at night, I didn't want to take any chances. I just got the most I could get, which was about 80 something pips, and I closed it before going to bed. But you could have chosen the range of the body, or you could say the whole thing and go half. So the whole of it is about 190. Half of that is about 80 or thereabout. Well, forgive my maths. That's not 80. That's almost 100 or so. You know, so halt and reverse. I mean, well, you could say this is a bonus. If you just look at it now, you see a number of times halt and reverse works. Again, trade it is best when you trade it at extremes. In a sense, the price has really moved far down or moved far up. This is a halt and reverse which worked. How many other halt and reverse worked? Halt, reverse, halt, reverse, halt, reverse. Guys, you guys, when you make all your money this year, remember to send me something. I'll give you my address. I'll give you my wallet address. I'm dropping so much nuggets here. Halt, reverse. Even though they didn't go deep. This is like a range. It's like a range here, but the halt and reverse is still working. However, always do your back test because there are times when, it will not work as beautifully as you want it to. Halt, reverse. Halt, reverse. Now, those are all bullish halt and reverse. The bearish one works as well. Halt, that's the bearish one. Reverse. Obviously, it's in an uptrend, so you are expecting most of the halt and reverse to be bullish because it's an uptrend. If it's a downtrend, you will see the halt and reverse working in the opposite direction beautifully. Okay, guys, it's coming up to 9:30. Oh, well, yeah, oh, well, Emmanuel is laughing, but it's true. You know, uh, you know, when um, when you make your money, remember my family name. Remember my family name. Even if I'm not around, you know my children. You don't know my children. You know the family name. Just ask them if you are the child of Francis Obasogie or your daddy did me well. Just take this £1 million or dollars. Okay, let's see if we can find another trade. I really want to find another trade. Okay, this gold, I'm going to pause the recording now. Okay, so in addition to what we've said today, just in case you've not heard me say it in the past, um, the setup could be nullified. The setup could be is nullified, not could be, is nullified when price goes and takes out, the original entity setup that you were looking to get in on. For example, this is the range of the strong man. The price broke below, which is what you want. It just about broke below, but that's fine. It went back up, and this candle almost took out the high of that one. On this occasion, it didn't. It's like an equal high, almost equal high. When it came back down, fine, you could have entered and gotten, well, you got in better than your one-to-one, even though that's a counter trend. But what I'm saying is, if the candle had taken out the original setup you saw, then this setup becomes nullified, becomes null and void. Don't trade that one anymore. Trade a new one that forms. So if this candle, if that candle had closed high above that, nullify this setup and now work with this new high. That's important, guys. It's important. Let me see if we can find a real life example. Okay. There's one there. Well, I think so, until we find out. So price broke below it. Okay, and it went back up. You were looking to sell because the price was going down. It pulled back. So you are thinking, okay, when it, the momentum is to the downside. So it broke out of that range, went back up. Guess what? It broke the range. It broke out of the range to the opposite side. This has become nullified. You can't trade this one anymore, or else you could lose woefully. If anything, this one formed an HR. You place that there. It did not break out anyway. It didn't even break out. It pierced through the range, but did not close out. So this is not even a valid setup. Went up. Okay, you're saying, okay, fine, maybe I could trade this one. And this candle is kind of like almost the same size as that. So I'll work with two candles. You see, this is the part of it that's a bit discretionary. Because if there are five of us in the room, some of us could say, okay, fine, this one passes as a strong man. Others will say this passes as a strong man. Guess what? If in doubt,
What?
oh yeah,
Sorry, isn't that a halt and reverse? It can't
yeah,
that be a halt and reverse?
this is a halt and reverse.
Yeah.
Yeah, but like I say, I mean, we can trade the entity setup. We can trade it as an entity setup as long as the strong man is taken out. So in this case, you could say, okay, fine, I'll use this two as I'll use this candle, this green candle, as the strong man being taken out. Some of us might say, oh no, that's not exactly a strong man. So what I'm saying is, if in doubt, do otherwise. I mean, you should not, even you should not be doubting, can this pass as a strong man? If you are doubting yourself, then do otherwise. Just say, okay, fine, I won't take this as a strong man. Let me make it two candles. Let me string it together. And guess what? You would have gotten your break and retest. Break, retest, continuation. But hey, it's too far from there. So you can say, okay, fine, let me bring it close here, just in case. It went, triggered it, went so far and dropped, and you're able to get more than your one-to-one. Okay, fine. If you had used here, if you had used that as a strong man, the candle came out, retested, closed inside, dropped, closed out. Even though these are smallish candles, fine, you entered. Yes, you won, but you want to be on the safe side. Let your strong man really qualify as a strong man. Because the whole essence of a strong man, like I was saying to Jacob, it's like if you throw a stone and Goliath falls down, what's left is to cut off his head. So if you threw a stone and his head, he didn't drop. You throw another stone, it didn't drop. Maybe you want to run. Just leave that alone. What I am saying is basically, if the first line of defense, I mean, the bulls are in control here going up. The first line of defense is the strong man. If the strong man has been taken out, know that you are going to go away with the loot. You're going to win something. You're going to get something. You're going to go away with the bag. But if the first line of defense, the strong man, is not taken out, then you could be putting yourself at risk. Because if this is not the strong man, you've just taken out, some, I don't know, some defender, if you like. The strong man is the one who is defending, the strong man they put in place to defend against you taking them out. If it was just a weak man you took out, because it's like a weak man, a small man, if it's a small man you took out, you still are going to meet with the big man and you could be in trouble. Anyway, guys, let's leave it here as today. I mean, I'm not seeing any other trade I can really jump into. There's nothing else I really like. What obviously you now need to do yourself is to do some back testing, serious back testing.